And good afternoon. Welcome into Market Talk for Friday, December 3rd. Thank you for making us part of your day once again. Appreciate having you here. I'm your host, Jesse Allen. Thanks for joining us. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us. All of our streaming sources are there. Links to latest news stories in agriculture, market information, so much more. It's all online, markettalkag.com. Well, as we look at the market trade on a Friday, wrapping up what's been an interesting week to say the least. A pretty decent day, especially in the soybean market. Cord following along as well. A little pressure in wheat, but otherwise, overall, not a bad way to wrap up the week. Let's talk about all of it. Let's bring in our buddy Ted Seifried with Zaner Ag Hedge joining us this afternoon. Ted, great to have you back on, sir. How was your Thanksgiving?
Uh, Great to be on, Jesse. Thanks for having me. Thanksgiving was good. We were down in Florida for my 10-year-old son's hockey tournament. They did not do well. And a lot of the parents are way too serious about the stuff because they were really bummed out about it. But I had a great time, so whatever.
Well, hey, if you had a great time, if your son had fun playing, that's
Yeah,
all that
the kids had
matters,
a good
right?
time. That's what matters. Absolutely. Yeah.
That is absolutely what matters. Well, I'm sure you go to Florida for Thanksgiving and then you look at the markets on Friday and then Monday and Tuesday and just see all of this risk off trade,
Yeah.
all these worries about Omicron and this COVID variant and everything just kind of just playing in like a little black swan event here in the market. But then midweek we kind of turn things around and here today fairly positive, led by soybeans. Soybeans kind of taking the charge here and running a little bit higher. Some more sales announced on the books this morning. So, what are your thoughts with how Friday shaped up, especially that soybean market?
Yeah. I mean, look at soybeans over 50 cents off the lows and corn over 22 cents off the lows. That's really nice to see. And this is what I'm going to call dust settling, right? I mean, we had a panic event that came at a really weird and awkward and I'm going to say unfortunate time with the thin holiday markets last week. And that kind of carried over, the panic certainly carried over into Monday and Tuesday and Wednesday a little bit this week. Going back to last Friday, I mean, you had a really nice reversal off of lows in corn. Corn ended up 7 cents. Beans were, 14, 15 cents off their lows, even though they were down on the day. And as a grains trader, you went home after a shortened trade session last Friday thinking, well, that wasn't so bad. But then you saw crude oil down 10, and you knew the professional traders were going to come in on Monday and be on some pretty hefty margin calls, and there was going to be something going on there. So you didn't really know if that was going to be affecting grains or not. You didn't really know, um, what the extent was going to be. And the shortened holiday session on Friday didn't make that easier because you had to make decisions earlier. But now we know what what the extent was. And really, I mean, you just saw this managed money flush out based on concern, based on fear. And Monday I'm sitting there scratching my head saying, is this really what we should be doing? Because Jesse, we know the narrative, we know the game plan, right? For the past 2 years, when we've gotten bad news about coronavirus, what has the government response been? It's been, let's throw money at the problem. And by throwing money at the problem, we're creating inflation, we're creating upward pressure on commodity prices. So why are we selling off these commodities when the likely reaction to this, or the playbook reaction to this has been, let's add more money into the economy? I think we should have been buying, but you get fear, you get that panic, and that's what happens in these markets. Now, we talked about dust settling, and I think that's kind of what's happened here towards the end of the week is that we've stopped with the panic fear selling. So we get to trade a little bit more of the actual fundamentals of the individual commodities themselves. But then also, I think as time goes on, we're going to get this buying based on the idea that, hey, if we do continue to stimulate the economy and we do continue to just pump money and pump inflation, there should be upward pressure on commodities regardless of fundamentals. So I think you got a little bit of that too. But for soybeans to be ending the week the way they did, I think that's a really good sign. We closed over some very key moving average support areas. Same thing with corn. It really looks good again on a chart after getting kind of scary earlier in the week. And fundamentally speaking, we've got some concerns about South American weather. The La Nina forecast that they have in place looks, the forecast that they have for the next 2 weeks looks very typical of that La Nina event. and could mean, they're missing out on some rains in some very key areas, especially southern Brazil and Argentina. And that could be a bean problem, which is why beans kind of wanted to be the leaders late in the week. I also think that just in general, even without a La Nina year, we still have risk on a South American crop, and things are so tight. I'm going to say a 320 or 340 million bushel carryover in soybeans, given the amount of usage that we have. I still think that's really tight. So I do think that we should be stronger between now and the end of the year. A lot of times, we talk about getting quiet during the month of December, but look at last December. We were making leaps and bounds higher, specifically in the corn market, when everybody was expecting markets to be quiet. And I wonder if we're going to see something similar to that this year. And when it comes to corn, that's a different animal. That's the one that's been sort of the most bullish fundamental story lately. And it's because everybody's been talking about, price of input costs and what that means for our planting for next year, potentially a big shift out of corn acres into soybeans and so on and so forth. But I think the trade's missing out on a little bit of a story there. And we kind of hinted at it last time we talked. What about the Brazilian second season safrinate corn crop? This is a situation where these guys have already planted soybeans that look pretty good right now. And if they end up with a pretty robust soybean crop with some pretty good prices, do they feel the need or the urgency to go out and really get aggressive on planting that second season safrinate corn crop, especially if input costs are really high, or maybe inputs are just really scarce and unavailable? Do they say, we already made decent money on our bean crop on these acres, we don't have to really push the envelope on corn? Or do they say, well, let's just get the corn in and not put the inputs down, or less inputs down? So acreage or yield or both could suffer. And we might have a really bullish corn story, possibly a lot sooner than later, well before we get into our spring planting window. So I don't know. I don't feel like inflation's going away. I don't feel like we're going to see a dramatic shift in our economy. Personally, I don't know if I have a whole lot of faith in our economy as a whole right now, but the inflation is real. And if that inflation continues to happen, which I think it will, it's going to be a tailwind for commodities. I mean, we're going to see prices buoyed by this inflation. And then again, you throw in some risk with weather from South America. I think grains have a clearer upside potential between now and the end of the year, or into mid-January, than they do downside. But that being said, if we've learned anything in the last couple of years, Jesse, strange things can and do happen, and apparently on a very regular basis. So who knows what the news will be next week? There is a tremendous amount of risk to the downside.
Yeah.
But we also want to manage that upside potential. And so you have to be fairly active with your risk management right now. There's a lot of different strategies to be using, but you can't just sit on your hands, not in this climate.
No, you cannot. A couple thoughts I had come to my mind listening to your great analysis there, by the way, Ted. With inflation, we're seeing crude oil go a little bit lower. Do you think lower energy prices could help with the inflation problem? Possibly. What are your thoughts on that?
Well, Jesse, they always say that inflation minus food and energy, which I never understand, because food and energy are two of the biggest things that we spend money on, one. And two, energy in particular goes into the production of all the things that we're consuming. So yes, the answer is yes. I mean, lower energy prices do help inflation, help fight inflation, because the cost of production for pretty much everything goes down. That being said, I don't know if crude oil prices necessarily need to keep going down. I kind of feel like crude oil prices are going to go back up. Crude's an interesting scenario when you talk about, okay, we had the panic risk off event, but we had other things going on in crude oil, unlike the other commodity markets. And that is, strategic oil reserve release. It wasn't really much more than a drop in the bucket. But the market's concern with that is that we're willing to do that. So the fact that the U.S. government is taking steps to be active players in the crude oil market That's what kind of scares the bulls a little bit. That, and now OPEC has joined in on that as well. They've said they're going to have measured increases in their levels of production. So we're going to have more crude coming, and more of something generally is a downward pressure on prices. That being said, energies as a whole are coming at a premium globally, and I don't know if that necessarily fixes the problem. I still think that we're going to see inflation in energies, and I still think that we have a tight enough balance sheet on energies as a whole that I think crude oil can go higher again as well. I don't know if we need to go make new highs. I don't know if we need to see $90 or $100 crude oil, but can we get back to 75, 78, 80? Yeah, I think so, and I think there's a good chance we will. In fact, I really kind of think crude oil just based out, and now we're going to bounce. So I don't know if that fixes the inflation problem, because I don't know if crude goes down from here any further than it has. The interesting one for me is natural gas. It's always been interesting because our natural gas situation in this country is quite a bit different than the natural gas situation in the rest of the world, specifically in Europe. That's really being caused by, they have natural gas stocks in Russia. Russia would like to fix Europe's problem by sending their natural gas through Nord 2 through the pipeline, but Germany's kind of blocking that. So it's just kind of a bit of a standoff. In this country, our natural gas supplies are building because of the mild winter that we've had so far, or fall and winter that we've had so far. We are lower. Our stocks are lower than they were this time last year, but not by much. Now we're talking 4 or 5%. That's really not much, and it's not enough to really justify high domestic prices. and natural gas is important when we talk about grains, because that's one of the biggest building blocks to most of the inputs that we use. And I see natural gas continuing to come down. Yes, we will get some threatening forecasts. I don't doubt that. It's wintertime. This is what happens. So we'll have our bumps and bounces, and overall inflation could be, like we said, that helps all commodities. But I don't know if I really ever see a reason for natural gas to go in and make new highs unless we start exporting a ton of it. And I just don't see that necessarily happening. So to tie it all back together, Jesse, I do think input costs have a very good chance of coming down by the time we get into our planting season. I've never really been on the boat of a massive shift of soybean acres into corn. I think as long as inputs are available, even if they're at higher prices, we're still going to plant the corn, mainly because we have good corn prices currently, and it still pencils out. So again, I think the bigger story for corn from an acreage standpoint is South America, but hopefully we'll already be at some very good prices when we get into our planting.
Ted, let's talk livestock real quick. Cattle, cash country has just been on a tear the last couple of weeks, and higher
finally
again this week.
Yeah.
What are your thoughts with what you're seeing over in cattle?
Jesse, we have been stuck in a sideways trading range for cattle for a very, very long time. And a big part of that is because cash was stuck sideways, even though packers margins were really very good. Domestic demand, we know, has been really good. Our export demand has really picked up as well. And we've had some pretty sizable sales to China too. So I've been saying for a long time that there's upside potential in cattle. We just need the cash to move. Now that cash is moving, I think we have a chance to break out of this range to the upside. It might be hard to do from a technical standpoint, but I've been looking for it, and I think now is finally the time to say, hey, I think there's some really significant upside potential in cattle. Now, again, as we talked about in grains, that's all barring another major economic or macroeconomic event. Who knows? I mean, it's so hard to predict these things coming out of left field nowadays. But short of something like that, and I don't think we will see that. I think we just had our worst scare, or the worst scare that we're going to have for a few months at least. I don't know. Fingers crossed on that one. But no, I see higher prices for the cattle. I really do. I think domestic demand is going to be exceptionally strong throughout the holiday season. A lot of people with a lot of money that are wanting to spend right now, and I think the public as a whole is aware of the inflationary thing that, I mean, it gets talked about on news media all the time. So, what's the incentive to save? I'd rather go out and buy some really nice steaks and things like that. And there's other things that I'd like to buy that I can't spend money on right now because they're just not available. But steaks are available, and I'll go have a nice steak.
Well, on the flip side of that, hogs, a good weekly export sales report again there. China showed up as a buyer. It feels like this hog market maybe found its bottom, possibly, potentially. trying to do something. What are your thoughts on what's going on in hogs right now?
Yeah, for a while, weights have been higher. So that means marketing's a little bit backed up. And so that front month, December in particular, has been a bit of a drag on the hogs as a whole. And it's hard to get rallies like we've had in the back months while the fronts are down because it's bear spreading in a bull market, right?
Mm-hmm.
It just feels somewhat unnatural. But that being said, holiday ham season. Yeah, I feel good about the hogs. We have less animals out there. Again, I think domestic demand is going to be really strong throughout the holiday season. Our export demand, they're picking it up as well, and China is an active player again, which is great to see. So yeah, I'm fairly bullish hogs. I think we finally have put in a bigger, broader, long-term bottoming formation. I think there's more upside potential for the hogs. I'm optimistic there. But then again, I've been fairly optimistic hogs for some time. I think we just got to get through the next month or so. But into the spring, I think things get a little bit more interesting there.
Ted, any final thoughts you have for us? Anything you want to reiterate before we run out of time?
Wow, Jesse, I don't know, man. We covered a lot of bases. No,
we
I think we're
we
good.
tend to do that. We tend to cover a lot of bases in a short amount of time, Ted.
You're great. You're great with the questions, buddy. I don't know. I know I said it earlier, but I kind of want to bring it back to the idea that, hey, these are some pretty wild times in markets to be doing nothing about your marketing. If you're a producer, to be doing nothing about your marketing, it's a really bad time for that. I think you should be fairly aggressive on making new crop cash sales for both corn and soybeans between now and the end of the calendar year, or at least into the first couple of weeks of January. But I also love the idea of re-owning and using some limited risk strategies to do that. I think you really need to be doing that. Also, I'm going to say, in years past, we've gotten kind of lulled to sleep during the month of December because of holidays, and a lot of professional traders just head for the doors, and the month of December is just kind of our vacation or holiday time. I kind of don't think that's going to be the case again this year. It certainly wasn't last year. So again, this is a really good time to be paying attention and to be making some decisions.
Well, Ted, if folks need a little help making some decisions and looking at their plan, I know they can reach out to you at Zaner. How can they do that?
Yeah, you can reach me directly. My direct phone line is 312-277-0113. You can find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. You can also sign up for our morning agricultural hedge newsletter. And aside from that, you can find me on Twitter. I'm at the Ted Spread. As you and I were talking about before we started recording, I like to talk about three things: markets, cars, and fitness. So if any of those things, and occasionally I will get into the argument of whether a hot dog is a sandwich or not. I will die on that hill. But yeah, if you like any of those things, it's I think I'm a pretty good follow.
At the Ted Spread on Twitter. And again, you can learn more at Zaner.com. Ted Seifried with Zaner. Appreciate the time on this Friday. Thanks for joining us on Market Talk, and we will talk again soon, sir.
Yeah, it's always a pleasure, Jesse. You take care. Happy Friday, buddy.
Happy Friday. Ted Seifried with Zaner, our guest today on Market Talk. That's going to do it for the Friday, December 30th edition of the show. I'm Jesse Allen. Have a great afternoon.